All right, well, concerns over the latest jobs report as President Trump recently fired the commissioner of the Bureau of Labor Statistics. So for more on the latest numbers from the report, we're joined now by Wilsey Asset Management Vice President Chase Wilsey. Good morning, Chase. Good to see you.
Good to see you too.
All right, so let's talk about what happened in July. We added 73,000 jobs, not as large of a number as was expected. And then, of course, unemployment rises a smidge, 4.1 to 4.2%.
Yeah, and I really think the miss on the headline number, 73 to 100,000, that's not the big deal. The concerning factor was the prior 2 months were revised down by a total of 258,000. I mean, that is a huge change. And then those 2 months now only produced monthly gains of 14 and 19,000. So you average that out over a 3-month time frame. Job growth is definitely slowing. I will say though, 4.2% unemployment rate, yes, it did tick up, but that's still, I'd say, extremely healthy.
Yeah, and when you look at the adjustments, I mean, it's unfortunate because when reports are revealed, when we get them out, that's the number that tends to stick in people's minds, but you don't always go back and look at how much they're adjusting those numbers after the fact. How much should we rely on those initial reports? How much should we rely on the adjustments?
You know, it's interesting, we have seen a lower uptick, and this is all survey data, so this isn't like, oh, they're going in each company.
An exact science.
It is, I'm going to say fact. It is going to be a gauge on how the economy is doing. It's not an exact science, but again, there's been lower uptake in those numbers. I don't want to say they're bad numbers. I don't want to say you shouldn't look at them, but yeah, I mean, looking at the revisions, there's some question marks, I would say, in the initial reports that we're getting on a monthly basis.
Could that have led to the firing that we saw President Trump with the Bureau of Labor Statistics had?
I mean, absolutely. This isn't the first time we've seen revisions. There seems like there have been more revisions than normal. And again, maybe this is uptake of the payroll information. Maybe it's the survey data isn't as strong. Maybe it was warranted. I just think it was kind of interesting timing, unfortunately, right after the report came out. Not a super strong report. You know, I'm not in the room, so I don't know what he was thinking, but it seems like it was interesting timing.
Okay, and as we look at all of this, of course, this is, you know, a look towards, are we going to get that interest rate cut from Jerome Powell? And it was interesting that we saw a little bit of disagreement there in the Federal Reserve with some of the governors saying, yeah, I think we should have, you know, lowered the interest rate.
Yeah, that was actually the first time we've seen 2 dissents, I think, in like 30 years.
Right.
So that's quite unusual. And, you know, having the economy softening, and the economy, I'm going to say, is softening. We got GDP out, and you had a 3% gain, but you kind of remove a lot of the noise from the trade data. There was a huge spike in imports in the previous quarter, then a huge deceleration in imports in the last quarter, really caused a lot of chaos. And the GDP report, I'm going to say, wasn't great. So the economy is slowing. Now we get this labor market data coming in, and again, not great. It's not terrible. We're not heading towards recession yet, right, but it's not a accelerating economy. It's decelerating. It's slowing down. I definitely think you can make the case now for interest rate cuts at the September meeting. Maybe now we have 2-3 cuts as we exit 2025.
So if you were a betting man, would you say that we could expect to see a cut in September?
I'm going to say yeah. I mean, okay, the betting markets have it somewhere close to 90, 100% last I've heard. So I'd be very surprised, I'll put it that way, if they do not cut in September.
I mean, you did say softening, not something to panic about, but overall, what would you say is your impression of what's happening in the economy, and is this just an adjustment to a fix for down the road?
Yeah, I mean, I really think the big thing is, I mean, we've had such a strong economy for so many years now. You can't just keep growing and growing and growing. I mean, again, you talk about a 4.2% unemployment rate. We just don't have the people, essentially, to fill the jobs. You've had a lot of people retire, and that's great. You know, you've had asset appreciation on stocks, asset appreciation on homes, so you don't have people in the same magnitude to the workforce that maybe there was a few years ago because of the ability to retire. So I think it is just hard to continue on that growth trajectory because there's not much room left to grow. Again, doesn't mean we're going to head towards a recession tomorrow, but I just think looking for 3, 4, 5% growth on GDP, not going to happen in my view.
But while we were seeing some of that growth, the inflation was getting out of control. Do you expect that there to be a fix there?
I don't really think inflation is going to be as problematic. Obviously, tariffs might cause a one-time spike in prices, but overall, I think inflation is heading back towards the Fed's target at 2%. I think that is another reason why they can start cutting interest rates once again.
All right. We have another month to see. Chase Wilsey, Wilsey Asset Management, thank you so much. Appreciate it.
Thanks for having me.
All right.